Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended lower amid a broad-based sell-off which extended into the third day as investors turned risk-averse ahead of the US tariff deadline. US equity indices fell sharply on Friday on rising economic worries as economic data showed a plunge in consumer sentiment, surge in inflation expectations, tepid spending, and a pickup in prices. Asian equities came under pressure amid concerns over widening trade war after the US pushed ahead with tariffs on automakers. The weakness was led by Korea, which fell about 3%, and Taiwan down 2%, while Indonesia rebounded, gaining 7% for the week, and Singapore up 2%. Chinese equities remained under pressure for the second consecutive week, down 1%, after fiscal revenue and land sales revenue data fell for the month of January and February of 2025. The Indian fixed income market had another strong week, with government bond yields falling across the curve, driven by strong domestic demand and a lower than expected borrowing plans for the first half of fiscal year 2026. The schedule showed that the government plans to borrow around INR 8 trillion or 54% of the fiscal 2026 budgeted INR 14.8 trillion via dated government securities. This was lower than the 58% borrowed by the government in the first half of fiscal year 2025. Overall, the supply was concentrated in the belly of the curve. Supply in the 10-year segment is the highest at 26.3% of the total borrowing, also higher than the 24.6% of the total borrowing in the first half of 2025. Supply in the 3 to 7 year bucket is marginally higher compared to the borrowing in the first half of 2025. Supply in the 30 to 50 year bucket is at 35% of the total borrowing for the first half of fiscal 2026. This was lower than the total supply in first half of fiscal 2025. During the week, the 10-year Indian government bond yield fell 4 basis points to 6.58%, while the 3-year and 5-year government bond yields fell 6 basis points and 5 basis points respectively. Brent crude oil recorded its third consecutive weekly gain, rising 2% for the week to close at $73.8 per barrel, supported by US sanctions on Venezuela and Iran, while data showed that US crude inventory declined 3.3 million barrels, signaling continued strong demand. The INR rose 0.6%, closed at a year-to-date high of 85.5 per dollar, supported by sustained dollar sales by domestic banks and improving foreign investor inflows into domestic equities. Coming to the macro updates for the week, there was 1. India's core sector, or the index of 8 core industries, recorded a growth of 2.9% in February of 2025, a deceleration compared to a growth of 4.6% in the month of January. The core sector has recorded growth in 5 consecutive months. 6 of the 8 core sectors saw an expansion in February. Coal production grew 2%, lower than the 5% growth recorded in the month of January. Petroleum refinery products saw a marginal increase of 1% growth as compared to 8% in January. Electricity generation was up 3% this month. Steel production also grew 6%. Fertilizer production saw a growth of 10% in February, while cement sector recorded the highest growth, rising 11%. Crude oil and natural gas production bucked the trend, declining 5% and 6% respectively after recording a growth of 1% and 2% in the month of January respectively. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.